Alright, so we're going to look at LO3, which looks at understanding financial statements information. Okay, so companies are required to prepare financial statements at the end of their financial period, and the full set of financial statements include the statement of profit and loss and other comprehensive income, the statement of financial position, the statement of changes in equity, the statement of cash flows, and finally, the notes to the financial statements. So your curriculum requires us to understand information contained in the statement of profit or loss and other comprehensive income, the statement of financial position, and the statement of cash flows. So firstly, we're going to look at understanding information in the income statement. Alright. So the income statement is also known as the statement of profit or loss. Alright, it shows us the revenue and the expenses of the firm over a period. And the equation for the income statement is revenues minus expenses is equals to net income. So revenue is the money that is generated through the sale of goods and services in the normal course of the business. And then the expenses are these amounts incurred to generate revenue. So these expenses include the cost of goods sold, operating expenses, interest, and taxes. Alright. So we start with our revenue, and then we less our cost of goods sold, and then we come up with our gross profit. This cost of goods sold, these are direct costs of producing a product or a service. So this cost of goods sold includes the purchases, the carriage inwards, and so forth. And once we get our gross profit, we then less selling and general and administrative expenses from the gross profit, and then we come up with operating profit. And then from our operating profit, we less the interest, we less the tax, and then we come up with the net income. So basically, this is all the information that is contained in the statement of profit or loss. And then we move on to understanding balance sheet. Alright, so the balance sheet is also known as the statement of financial position. It shows us the financial position of the company at a point in time. It consists of the assets, the liabilities, and the equity. So when we prepare the statement of financial position, we use the accounting equation, which is assets minus liabilities, which gives us what? Capital. So assets, these are the resources that are controlled by the firm, which are supposed to provide future economic benefits. So assets are divided into two. We have non-current assets, and we also have current assets. Alright, so the non-current assets, these are the assets which cannot be converted into cash or used up in one year or one operating cycle. So our main non-current assets include the property, plant, and equipment. And we also have intangible assets, which are non-current assets. And one good example of intangible assets is goodwill. So intangible assets are those assets that lack what's a physical substance. And then our current assets, these are the assets which will likely be converted into cash within 1 year or 1 operating cycle. So these current assets, they include things like our cash, our receivables, and our inventories. All right. And then these are usually presented in order of their liquidity. Okay, cash being the most liquid. And then we also have liabilities. All right. Then we say liabilities are what? Our obligations. And then so they are divided also into 2 categories. We've got non-current liabilities and we've got our current liabilities. So our current liabilities, these are obligations that will be satisfied within 1 year or 1 operating cycle. Okay, these include things like our trade payables, bank overdrafts, and so on. And then our non-current liabilities, they include things like the long-term loans. Okay, these are things that cannot be met in 1 year or 1 operating cycle. All right. And then we said the other component of the balance sheet is the owner's equity. Okay, so owner's equity is the residual interest. So that when we say residual interest, we mean that from our assets, and then we subtract our liabilities, the residual interest that remains is the owner's equity. It usually includes a contributed capital, our retained earnings, okay, our preferred stock, and so forth. And then we move on to our cash flow statements. We want to understand the information that is in our cash flow statements. All right. So our cash flow statement, it shows us the sources and the uses of cash during an accounting period. Okay, it gives us information about the operating, about the investing, and the financing activities of our business. And then in our statement of cash flows, we use information that we get from our income statement and also information that we get from changes in the balance sheet accounts. So it is divided into 3 sub categories. We have the operating activities. So cash flow from operating activities, it consists of the inflows and outflows of cash resulting from transactions that affect a firm's net income. So under operating activities, we have inflows that includes cash collected from our customers. Then our cash flows include cash paid to our employees and our suppliers, and also cash paid for other expenses. After that, we have investing activities. So under investing activities, we've got inflows and outflows of cash resulting from the acquisition or disposal of long-term assets and certain investments. So inflows, we have sales proceeds from fixed assets. Okay. Outflows, we've got acquisition of fixed assets. So when we buy a new fixed asset, okay, when we acquire equipment, okay, that is in cash outflow under investing activities, okay. And when we give others loans, it's also a cash outflow under investing activities. And then after that, we've got financing activities. Okay, so cash flows, cash inflows and outflows. Under cash flows from financing activities result from transactions that affect the firm's capital structure. Alright, so if we issue new stock, okay, this increases our capital, isn't our issued share capital. This is an inflow under financing activities, okay. And then our outflows includes the dividends that we pay to shareholders, principal paid on debt, okay. If we repay debt, okay, it's an outflow under financing activities. And if we reacquire stock, okay, and we make a payment, it's a cash outflow under financing activities. So this is the information that we need to know from what statements of cash flows. And then lastly is an assignment. I want you to outline and explain the differences between debt and equity. Alright, so you define what is debt, what is equity. Alright, so what are the examples of debt and the examples of what? Of equity. And then you outline and explain the differences.